Hey guys, hi. Whether you've already bought my expert advisor Enslaver, are just thinking about buying it, or you have no idea what it is but want to make good profits on the financial market with minimal risks, this video will be very useful for you. In this video, I'll explain how the Enslaver expert advisor trades with a single position and how it trades with 3 positions. What is the difference between them, and how will these two trading styles bring you profit? How will they affect drawdown and all the other key metrics of this trading bot? So I'll explain everything to you in detail right now. Let's go over to my platform. So guys, to really understand how this works, we'll compare the single trade mode and the 3 trade mode with each other, and we'll look at all of this on the price chart. Right now in front of us, we have the single trade mode. We can see how the advisor makes these trades. We can see this in the price history. Here is a sell trade, here is a buy trade, and this is a buy trade. And here, in theory, we should have had the same kind of reversal as in these spots. Yes, the advisor makes a sell trade, but often the market pulls a deceptive move. The indicators show that the price will go down, but instead it goes up. So here we would have closed according to one of two options. Either, for example, somewhere around here, our stop loss would have been triggered if the price had gone further. Or we close the trade when it pulls back to the average, to this value according to the Bollinger Bands indicator. Of course, we have a lot of other indicators here, but they are hidden inside the code. On the price chart, we currently just have the moving average, which shows the global trend, and the Bollinger Bands, which shows us the local trend. Let's move on. Again, the indicator correctly identifies these different price waves and continues to make the right trades. But notice, when the price doesn't go as planned, we simply close the position either by stop loss, which would have been triggered somewhere around here, or by a pullback to the average. This is how we systematically trade with a single position at a time on one asset. In total, we have 8 assets involved in trading. This is a multi-currency portfolio. Now, I'll show you how all of this looks in backtests for the period from 2018 to 2025. All right, guys, let's start the test. And let's see how the expert advisor performs on the EUR AUD currency pair. We just looked at trades on historical price data. Now we're watching the test for the period from 2018 to 2025. As you can see, these are the spots where the pullback to the average triggers in the loss zone. And here we have the profitable trades. As you can see, there are many more profitable trades. And on this asset, our deposit is growing. And we can clearly see that the financial advisor is not experiencing any significant difficulties whatsoever. In different and varied market periods, it consistently shows us quite stable and sustained growth. Yes, sometimes, like here, stop losses are triggered, and sometimes we close on a pullback to the Bollinger level with a small loss, but on average we are growing. Now I'll test it for you on all the other assets. This is what the test of the Australian dollar against the Canadian dollar looks like. This is precisely what the comprehensive test of the euro currency against the Swiss franc currency truly looks like in this particular scenario. This is what the test of trading the euro against the British pound sterling looks like. This is what the test of trading the euro against the US dollar looks like. This is what the test of trading the British pound sterling against the Swiss franc looks like. This is what the test of trading the British pound sterling against the US dollar looks like. This is what the test of trading the US dollar against the Canadian dollar looks like. So guys, now we take the Kvant Analyzer program and add all the test results that I saved into it. We carefully add all of the portfolios one by one. We load them into the program. Now we have obtained all the comprehensive results here. We will carefully select them and then proceed to create a new portfolio. And now we can look at this portfolio, the growth chart, if we combine all the test results into a single test. And this is the kind of growth curve we get. If you look here at the bottom, you can see the growth curve for each asset. And here is the combined growth chart for all assets. This is how we will get the trading result in our multi-currency portfolio if we trade with a single position. Let me remind you, here we are not using martingale, we are not averaging down, we trade no more than one position per asset using stop loss and closing on a pullback to the Bollinger Band's central line. So we have two options for closing, either a stop loss or a pullback to the Bollinger Band's central line. This is how we trade and make a profit. First, it's super safe. Second, it's profitable. Third, it works for any size of capital, but it doesn't produce a very pretty growth chart. There will be periods with some drawdowns, but it's safe. This will result in deposit growth of 50 to 100% per year, and the trading drawdown will be less than 5%. So it's super safe. This is suitable for prop trading, for personal trading, and let's say for your capital investments. If you have a good amount of money in your bank account, set up the advisor on your trading account and let it grow that sum with minimal risk. Here is the growth chart of your deposit. So your initial capital investment will grow significantly by a substantial 50 to 100% on an annual basis. Guys, now let's talk about trading with the Enslaver Expert Advisor using 3 trades. Look, when it correctly identifies price waves and accurately determines the reversal point, then we trade with a single position. You see here, we made a sell trade, here a buy trade, here another sell trade, and everything is fine. Yes, here is a view buy trade, but when our advisor determines a reversal and trades on a return to the mean, hoping that the quotes will reach the average value according to the Bollinger indicator. But the market, as I mentioned earlier, makes a deceptive move to trigger our stop loss. In this way, if we trade using 3 positions, our stop loss is set further away from the entry level so that we have room for averaging, in other words, so that we can use these free trades. As a rule, based on trading history and optimization, I see that the advisor usually manages with 2 trades, but sometimes it takes 3. Let me show you now. Look, here it seems like we've identified that the trend is about to reverse and we're moving upward. But the market makes a maneuver. And here, after a certain number of points, the advisor adds another trade, and when the price reverses, it closes them at the total profit value. Here, we have a small loss on this trade, but here on this trade, there's already a good profit, and we close these 2 trades with an overall gain. All right, let's move on. Here, we kind of determined again that it looks like there's a reversal, and we should be moving up, but the price doesn't reach the required level. And the quotes again go down, moving against this trade of ours. And here we add another trade, and then we close both positions for a total profit between this trade and this one. Here there's a small loss, and here again we use a stop loss for each trade. So if the price keeps moving further and we can't average out, and the price doesn't reverse at the right moment. In order to avoid a major loss on all 3 trades at once, the advisor will close them by stop loss. But as you can see, the price constantly fluctuates up and down, and at the right moment we add a trade and close it for a total combined profit. It's exactly the same here. Look, here we have a reversal downward. The advisor thinks the price will go here, but the price went even higher. That's usually the case. Well, in about 50% of situations. Sometimes it's even more than that. And the advisor adds another sell trade and closes it for a combined profit. Here, look, it sees that we've closed for a combined profit, but we're still very far from the average level. So there's a lot of room to move. It analyzes the market, check size, this is a reversal, and we're going to go down. It makes a sell trade and closes here with a significant profit of more than 50 points. Here, a reversal is identified and the price didn't go up right away. So the advisor adds another trade here. And based on the combined profit between these 2 trades, we closed with a gain. And it's exactly the same here. And you can see that there are a lot of such trades. And the most important difference of the main differences between trading with a single position and trading with 3 positions is that with 3 trades, the advisor is much more active because it has many more opportunities to trade. To trade with a single position, the advisor checks, double checks, and filters using various indicators. And finally, when it finds the perfect conditions, it makes the trade. But when we trade with 3 positions, the advisor has more room to maneuver because it enters the market more boldly. It knows that if something goes wrong, it can still average out. That way, it can later close everything at a total profit. So here, yes, it found a spot where it could trade with a single position. It made that trade and closed it with a profit. Here, it seemed to have identified a reversal. Yes, you'll agree. Right here, it's clearly a reversal. Just like here, exactly the same as here. It makes a trade but the price went down. Here, we add to the position based on total profit and close here. So look at how often these trades occur. And now I'll show you how this works in test mode. And let me remind you, it is crucial to understand that stop loss orders are also strategically employed in this context, serving as a vital risk management tool to protect your capital. Furthermore, we meticulously close these carefully combined trades precisely when the market price definitively touches the predetermined and significant Bollinger Band level, ensuring a disciplined and systematic approach to exiting position. So again, if the stop loss didn't trigger here and the price reversed, we will close here based on the total result, whatever it may be. Sometimes quotes close trades are closed at this level with a negative result. We end up with 2 losing orders. But this happens extremely rarely. For example, let's even find such a case right here. Here, the trades were closed by stop loss. There you go. Each had its own stop loss and they were closed by stop loss. But this happens extremely rarely. And in most cases, we have a profit. Okay, let's go to the strategy tester and test each asset from this portfolio in the tester. All right, guys. This is what the profitability chart looks like when trading with the Enslaver expert advisor on the Australian dollar versus Canadian dollar currency pair. Here, as I mentioned before, a stop loss is used for each trade. That's why we have these kinds of drawdown periods, and overall the equity growth chart for this asset, for example, at times may not look particularly attractive. If, for instance, you buy the advisor right before such a period and it starts trading like this, you might start getting frustrated, complaining, and asking, what's going on? Why is it working like this? But if you look at it from a much broader and more comprehensive perspective, you will clearly see just how incredibly well your trading account is consistently growing and expanding. And that's just on a single currency pair, while the portfolio actually includes 8 currency pairs. Take a look at how smooth the growth chart is, even with these minor drawdowns. Looking at the trading history, we have an overall steady growth chart. This is the Australian dollar against the Canadian dollar. There are also additional pairs. Now, I'll show you how this works when trading multiple positions. This is how it works with the euro against the Australian dollar. Guys, this is how it works with the euro against the Canadian dollar. So guys, this is the currency pair of the euro against the Swiss franc, also known as EUR, CHF. Guys, this is trading the euro against the British pound sterling. Guys, this is how trading the euro against the New Zealand dollar works. This is trading the British pound sterling against the Canadian dollar. So guys, this is how the advisor trades on the currency pair, New Zealand dollar against the Canadian dollar. Guys, now let's go to the quant analyzer and see how all these currency pairs I just tested are performing. How do they perform in the overall portfolio? Because we saw those jagged, rather wavy growth charts on each currency asset, and they weren't perfectly smooth. But what we want is to have a smoother growth chart. And now we'll see what it looks like if we use all of this. All right. If we use all of this at the same time, here is our portfolio. We'll use this kind of display where you can see the portfolio and the growth charts for each asset. They've been overlaid on top of each other over time in this program, and we can see our total trading result. And it really is, well, noticeably smoother. This is over the course of 5 years, trading with a fixed lot size, without any automatic money management, just a fixed lot. We move steadily upward. Of course, there are some sections that aren't so pretty. Yes, some trading drawdowns. But imagine, 5 years ago, you were at this point, and now you're here. You look back and say, this system is really awesome. And guys, I can tell you for sure that the way it works on the price charting, other words, in the test results, is pretty much how it will work in reality on the live price chart. But here we see a 5-year result, while online we see the result for each day. And in my MQL5 profile, you'll find signals that show how this works online right now on the real market with real money. And as for the answer to the question, which portfolio should you use? Guys, diversify. Open an account for trading with one position. Open an account with a broker for trading with 2 positions. Split your capital in half and run Enslaver on 2 accounts. On one account, you'll be trading with a single position. This will be more of a classic money management approach, more traditional trading, and safer trading. You can be sure that on this account, it will be super safe. On the second account, you'll have a more progressive, more aggressive trading style. There will be a bit more drawdown in trading. It will be a completely different trading style, as you saw on the price chart when I showed the trades, and you'll have much better profitability. So in this way, you'll have 2 accounts running with 2 portfolios. And this will be safe, and it will be good diversification. So guys, what do I recommend you do? Divide your capital into 2 equal parts, allocate it to two different trading accounts and set up Enslaver on each account. But on one account, let it trade with one position and on the other with three positions. You will end up with a diversified portfolio that will deliver a more stable, more balanced, and more profitable overall result than if you, for example, chose to trade only with a one position portfolio or only with a three position portfolio. We don't know in advance which one will perform better in the future. But what we do know in advance is that if you use both, the overall result will be smoother and with a smaller drawdown than the result of either of these individual portfolios. So guys, I wish you the best trading results. See you next time.